Good afternoon. Ken Jolliffe with BIS Commodities here in Cedar Rapids, looking at the commodity market review for the week of October 17th. Classified as the week of extreme volatility is what we've experienced. Corn market this week, D's corn up about 14 cents, soybean market up 29 cents, wheat market up about 17 cents. Livestock sector, we have the hog market down about $7 in the December contract. The live cattle December contract about unchanged for the week. The November feeder cattle market contract down about $5 on the week. Looking over at the equities market, where a lot of the volatility came from this week, we started out with the Dow being down at one point about 668 points. Looking at it at this particular time that we're doing this the video, we are down about 180 points for the week. So talking about the extreme volatility, it takes a big, huge look at what amount of money exchanged hands here today and this week in the equities market. We started the week out, when you look at Sunday night, we made new lows in the grain market, back with soybeans around 9.15, corn down in that lower 220 area, only to rally Sunday night and for the balance of the week. The rally stemmed a lot from the equity side of things, the Dow going down, the energy markets taking a big time hit. It seemed like there was an awful lot of fund managers coming out of what we would consider long equities and then covering the shorts over here in the grains this week to drive us up to the levels we saw. Now, we did see some new buying come into our grains. You saw little surges from time to time, each morning, to where we would see, several thousand contracts for corn, beans, and wheat being bought in a short period of time. But I think the general highlight of what we really experienced this week was just a massive exchange of dollars on paper, within fund managers, for whatever reason it would be, whether reallocation, whether there was some changes within the Dodd-Frank laws that continue to come out to regulate our marketplace, whether it was rumors of the European economy maybe going back into recession. Whatever it was, the volatility was extremely high for the week. So really, you look at the fundamental side of the grain market here, coming off the crop report from last Friday. We're still sitting here with a projected corn carryout of roughly 2 billion bushels, a bean carryout of 450 million bushels. It seems like once we come to this time frame every year, through October, whether it's this year, with the projections of the huge crop, whether it was 2 years ago, when we had the drought shrink our crops, we come to that time frame to where we start to slowly define what the actual supply of our grains are going to be, and it seems like it slows down the directional trade at that time during the month of October, meaning that when you look back at 2012, as we rallied into late September, once we got into October, started defining the crop size, that rally started to slow and started to more flatline at that particular time. Maybe that's what we're seeing a little bit here in our grain markets here in October, is we have slowly defined the size of the crop, that we do not see the descent down so far this month that we experienced during the month of September. It's more of a flat line trading range that maybe we're going to experience here for a while. Now, some of that also is due naturally to the delayed harvest that we've seen this week. Weather forecasts do look very promising as we move forward, but with heavy rains in parts of Iowa this week and just the general wetness everywhere slowed harvest down. It did show us that we still have not filled the pipeline, particularly in the bean side of things, coming off the extremely tight situation of the old crop beans, as we saw the spikes in the higher meal trade this week. processors continue to fight the exporters for, the new crop supplies that are being harvested, but being only about 40% done at this time and delay this week, created some, basis pops in different parts of the Midwest. Moving forward, it appears that if the weather forecasters are correct, we'll have a more open period of time here during the next week, possibly 2 weeks, to grind into the harvest. I'm sure that the commercial facilities, particularly maybe in the eastern Corn Belt, use this time frame this week to move grain around, move grain out, maneuver whatever they needed to do to continue to make room. It feels out here in Iowa anyway that as we move forward into the harvest that we should be able to handle the crop storage wise. It just depends on how fast it actually does move into whether it's the commercial facilities, the ethanol plants, or even the farmer storage facilities. But it seems like we do have the capacity out in this state to take care of the size of the harvest we got. Actually looking in next week a little bit more, we could see a little softness in the basis levels as harvest begins, a little more earnest. We could see a little more backup in the corn basis as we dig into that, bean basis as we move forward in that particular harvest here. We'll hear more about yields next week. We didn't get those type of reports at all this week. Maybe the market reacts some more to yield reports. Again, it seems like as we look across our state out here in Iowa that we're probably a little more variable in yields as what we've seen in the eastern states or the states extremely south of us here at this particular time. So a very extreme, volatile week of trade in equities and commodities this week. To kind of summarize it, we'll see what next week brings as far as the equity market, the dollar market, and see how that affects our grains at that particular time. So have a good weekend. Have a safe week next week of harvest. Thank you.